Well, shares of Peloton, as you see there, are sinking after hours. The company reporting a wider than expected loss. Gross margins and paid digital subscriptions did miss expectations. Peloton also cutting the price of its basic bike by $400. Let's bring in Bernie McTiernan. He's from Needham. He has a buy rating on the stock, actually raised your price target in the face of this. That's a bold move, I guess, this morning. What's your take on what you heard from the company?
Yeah, David, thanks. So 4 things I would call out. First, the guide for 1Q certainly is lower than expectations. I would say that the third-party data was coming out low, so I think that's as expected. But number 2 is that the adjusted EBITDA loss for the year that they're guiding to is quite a bit larger than we were forecasting. We thought we'd be in adjusted EBITDA positive for really the remainder of the company's life cycle, but they're guiding to a negative $325 million loss. That compares to $470 profit that consensus had. That'll be a key focus for the call for us. The company's stepping up some logistic payments in 1Q, but it certainly will be a focus. But then on the positives, I would say that one, the revenue guide and subscriber guide for the year are better than expected. One of the reasons why we're very positive on the company is because of the launch of the value trend, which is coming in just a couple of days here. And then fourth, and I think this is where the bull and bear debate will be, is the price cut. And so we think the price cut's a positive. The reason is because it's another focus on affordability for the company. We think that they're lowering their cost to acquire customers, which is allowing them to invest in affordability. I think that the bears are saying that if there's no pricing power for them, that's why they're cutting it. You're really missing the point here, and that the value of the company is their high quality subscription that has a really low churn, and lower prices means more customers on the platform long term.
All right, you already gave us a sense as to what you and other analysts may be focused on the call. So a lot of it may just be that EBITDA guidance. Do we have any sense as to what exactly may have been behind it, or are we going to just have to wait for when we get some answers?
They called out increased costs in 1Q, so I believe it's just shy of a $300 million EBITDA loss for 1Q. So that will be a focus. Another focus that will be what they expect for bike sales, especially we weren't expecting the price cut to the bike. So we have bikes being down 10% year over year in fiscal 22, and them selling almost 600,000 treadmills, driven by the launch of Tread. So I think seeing that breakdown in terms of what we're expecting for bikes will be another key focus of the call as well.